All right, so the markets did bounce. Obviously we had this massive bailout, so everyone was euphoric. However, I will be the first to admit that I don't think it was that impressive. Gold, okay, did actually go up. It did go through 2000 very briefly. Asian trading hours, if it's ever going to do it, it's then, and then came back down again and stayed a little subdued. EU, US hours, not the biggest surprise, I guess. I was anticipating a sort of a bigger move, but I understand why it happened. There was the okay, the banks are saved, so we don't need to rush to metals. But I don't think the banks are too safe because the way the banking stocks closed, or just the way they traded, it wasn't the biggest euphoric move. It was just an okay day, and the markets too were okay, but I didn't. I did expect like a 2% move up or something, and we didn't get that. Let's look at the markets, but yeah, it's just something I picked up. Also, one other thing, the dollar was down and gold was also down, so it's not the best direction for gold. Normally, when the dollar's down, you'd expect gold and silver to be up, but again, it was a bit special because of this banking reaction move. So let's go through everything. Also, some other commodities were quite impressive, like uranium. Well, uranium was more impressive two or 3 days ago, but I think it's coming to a point where it's decision time, and it may flush. That would be great for those who want to enter uranium, like me, for the first time. I think it's a good sector long term, and to get it as cheap as possible is the objective. It's quite cheap where it is, but we'll go through that too. Also, natural gas, that one's come back down to where I may add more. The stock I'm buying is trading on the LSE, so actually it wasn't trading by the time I noticed it. So I may be buying that today. So natural gas, uranium, and also oil. Oil bounced off this very strong area. So we'll be looking at not just gold and silver when it comes to commodities. Let's start off very quickly with the market. So small green day for the S&P totally makes sense because of this move we've had. Well, the banking recovery, which I think is temporary, by the way. I think there'll be another big bank, medium bank, lots of small banks going under, and we're straight back where we were. And who knows, UBS could start getting some exposure to the risk because its credit default swaps have also started to rise. So, I mean, who's going to bail out UBS, right? The Swiss National Bank? Probably, but that might not be enough also. Anyone you wouldn't want to get there. That would really destroy Switzerland, especially the confidence with the public. So let's start off S&P, small move up, nothing special, back to testing this prior support zone, you know, pretty much in the middle of the zone. So I don't think we're going to go all the way up to test this descending. I think that's too far out the way. Remember, we've got Wednesday tomorrow. We've got the Fed announcement, so I don't expect any crazy moves today. So on the way up, I expect this as resistance. On the way down, prior support to act as support. But actually, if we're going to go down, we're going to go all the way back down to here, in my opinion. And I do think we will go down, even despite, let's say, not even despite what the Fed might say. So S&P middle of the range. Nasdaq actually was unchanged, which I can understand because it had such a meteoric move up relative to the other indices. So not the biggest move up now, despite the banking rescue. Resistance on the upside, this one, and then again, this one above that. I just can't see the Nasdaq going higher. I'm sorry. Just like when these moves surprised me, they went a little higher and then they came back down again. And again, the Nasdaq is also one that will be very weak if everything starts to flush. So on the way back down again, well, I don't know what the Fed might say, 25 basis points, but if the market takes that as a very negative move for the markets, then the descending retest will be the first support zone, and then after that, this actually no, maybe not. If it's really going to go low, it's going to test the lows. So let's keep it simple. Those two support zones, so retest of this descending, and then the absolute low down here. But again, that will take at least a week of downwards move for the Nasdaq to go down. Otherwise, these two horizontals on the way up, the Dow Jones and the Russell, these are actually the more important two, in my opinion. You can see it had a nice strong move up off its lows, off support there because of the banking rescue. resistance on the way up, this horizontal line, and if we go higher, this descending line, which will probably coincide by that time to this small little wick. It does tend to make the difference. So I would say those are the resistance points on the way up. Let's see what happens today. Obviously, we had a nice close near high of day, so there might be a bit of continuation today. Russell 2000, more resistance than the Dow, which makes sense too. The Dow is more defensive, so if you're not going to have a very bullish atmosphere, you're probably not going to get the biggest bullish close in the Russell, but that's very weak actually. So for me, the Russell clearly is the weaker of all four indices, and will lead us on the way down. So resistance on the way up will be this ascending support retest, which probably would coincide with this horizontal line. And if it's not here, the horizontal line, it'll be here, somewhere within the gap fill. I'll leave it here actually on the way up. So I think there's a lot of strong resistance on the way up, but still that resistance is quite far away, 4 or 5%. Plus you'd have to take out yesterday's high. So this candle here that we've just forged, and that seems quite a way away too. So Russell is quite weak. Support obviously is just this white line. That's all there is. And the next support is the all-time low. So I will be watching the Russell more than anything else actually. If the Russell starts to go lower, testing this support and start closing below it, to me, it doesn't really matter what happens to the others. It's going to start moving down, and it should drag the rest with it because that's too noteworthy to ignore. So VIX, which I am covering now since it's proved itself lately, big drop. Okay, it's only 5%, but still you can see a lot of resistance up here in the high 20s. I do expect some support then around mid 22s, 23 zone. But you know how the VIX is, they slam as soon as everything is all clear. And I guess they're trying to say everything's all clear, but you have one more bank pop up and it's straight back to the mid 20s, high 20s. So yeah, but to me, the better VIX play is gold. Gold is more of a VIX than VIX. So I'm not going to spend long on VIX. Let's look at interest rates. So rates went up, which is a sign of calmness these days. So I love how the narrative changes, because if you're not buying bonds, which means if the rates are not going down, then everything is clear, because people were buying bonds like crazy due to the fear of the banking crisis. That's why it went all the way back down. So we went up with the rates, and nothing else to say. I mean, the rates today, what do I expect? I expect the market to be kind of unchanged, nothing too far up, nothing too far down, because it will depend on tomorrow. They're not going to make crazy moves until tomorrow. What will they anticipate? They'll probably anticipate the Fed saying rates go up 25 basis points. So the 2-year will probably have to go up to start to match that reality. So maybe rates go up, which means markets will go up a little bit too. Honestly, that's my opinion of what's going to happen today. So a small bounce continuation, unless there's some surprise banking, right? That starts to pop up again, then we're back to this pattern here where bonds get bought and rates go down. So you can see them just coming off their absolute lows here. Yeah, and remember, the 10s and the 30s are easier to read than the 1s and the 2s at the moment. So they didn't actually break down too much. So that pattern's still valid. The old pattern, the old low held. So maybe we'll creep up to the middle of this channel. That's rates. I'm not covering rates as much as I was before, because not only is the chart destroyed, but they're not trading in the same manner as they were, and it's more like, bonds were just being bought out of panic, and now the pattern needs to be reconfigured, and we need to see how they react to the Fed. So tomorrow is going to be very interesting to see how the old narrative plays out, with charts. If we can just sort of put the banking crisis aside just to see how that works. But I don't want the banking crisis to go away, but I don't think it will go away either. So okay, so that's rates. Let's look at the dollar. The dollar for me is more interesting than rates, actually, more telling. Now, we did close below this support zone. So for me, and it wasn't a crazy day yesterday, so I think we can read into that more than we can, let's say, rates. So that suggests the dollar's a little weak. And to be honest, with all the fear that's been going on, you would have expected the dollar to be stronger. And I was actually a little unsure, and I did say it can either go up or down. Wow, revolutionary stuff. But I really wasn't sure here because it was sort of coiling, and I thought it could easily go up and it would make sense. There's a crisis, it goes up. And if it starts to close above 106, let's say, we're going much higher. Or it can go down because of the pattern it's suggesting it wants to follow through with, which is, the dollar down despite the crisis, and it's already tagged this 105 zone. So it looks like the dollar wants to go down. The next support zone is this white line, which I've already drawn. In fact, all the trend lines are drawn. There's no more ascending trend line that I used to have in place because to me it's null and void. Because once you're down here, you're pretty much already below where the ascending would have been. And then the next zone is the all-time low of 100, just above 100. So the ascending wouldn't have counted, in my opinion. That's why I got rid of it. So here are the support zones on the way down. And I'll tell you what, if the dollar starts to go back down to 100, it will bounce. It'll bounce just here on this support zone. There's no way it's just going to go right through unless it's on news just the day before, like if it's just holding off at 101 and then there's news and it sends it down, then that's different. But if there's no news, it should bounce from this horizontal. 100 should be a line in the sand too, a psychological number, but you could start to see the dollar break down. And then honestly, we'll have to start looking for new ascending lines because there's no obvious one to me in the vicinity. I mean, this is the only one. This is the one I had before. It doesn't count once we take out this horizontal. So, and what would gold and silver be doing? What would all the commodities be doing? What about the other FXs, If I look at the US dollar, Japanese yen, for example, I'm going to have to start looking at these other FXs. Where's the support zone for this? Get rid of this one. It's totally gone. I mean, where's the support zone? It's, this sort of zone here. Obviously, we've got a bit of support around here. But otherwise, what's this support? Okay, yeah, prior. We have this. Okay, yeah, so these green lines make sense to me. And this breakout here, yeah, okay, I'll just start it from here. So we do have some support down here where the prior low was, which makes sense why it bounced from this area. But if the US dollar comes down against the Japanese yen even more, that might take us to 100 on the DXY. What about the Euro US dollar? Well, that's topping out too around this zone. So maybe we're getting a bit of resistance on the euro, comes back down again. That would give support to the dollar. Let's see. Thing is, we were up there, we smashed down again, and now we're climbing back up. What if we break out of this? If we break out of this zone, we're going to go test the old high, and that would send the dollar also lower. This doesn't count anymore, whatever it's for, actually. It's been retested already. Yeah, so we're going to have to watch the euro and the yen, actually, because honestly, I'm more inclined to feel that the euro will go up a bit more. I mean, look, they did 50 basis points. We're going to do 25. Maybe that's also part of it. But, we climbed up here. We smacked back down again. But look at this decent climb just after 3 days. So let's see what happens here at 107.5, 107.5. If we go higher and start to break out of this, like a close at 108, we could move all the way up here. And if that happens, and the yen's going back down to test its lows, let's call it 128, the DXY, is it starting to go down here? And what about gold and silver? So, but Wednesday will show us the true hand. So let's take a look at that and the pound, since I'm looking at the other two, because it's really the pound, the yen, and the euro that make up the DXY. Well, yeah, look, this is sort of doing what I think might happen to the euro. Took out its little zone. We could go higher to the next zone, 124. Wow, I remember when it was almost 1-to-1. But look at that, a little move higher, and we're back at the top of the pound zone. Very interesting. I'll start covering these three for the next 2, 3, 4 days. Okay, so that's the currencies, the DXY. Let's look at commodities now. Start off with copper. So, you know, we flushed back down this support, never went back down here. We've retested resistance, what I think will remain resistance actually. I think we'll go back down again. I just feel like copper is too weak to mount an offensive to go up here. It could, but then you'll have resistance over here. The descending remains in place. So I think all the trend lines remain correct. Natural gas, this is what I was talking about. Look at this. Back down again. Hopefully another move lower so I can add my second add. I've only entered once. I'd like to enter a second time. And if we flush, then it'll be where this white line is, I guess. Must be there for a reason. Yeah, all-time low or something. Let's look at the weekly. Yeah, that's good enough for me. I'll probably be more precise. Make it a 2 line instead of a 4 so I can get more precise. I'll redo that if we get there to get a bit more precise and get a better price. But yeah, the point is, look, we're testing the lows again. So I wouldn't want to miss it either. 2 spot something in the teens, maybe 221. No, I could get even lower. Let's see. Maybe it bottoms here and goes up. But I couldn't buy it yesterday when I noticed because the ETF I'm buying, which is based in London, was closed already. So, but still, I think it's a good buy long term, which is why I started my ad here, and I'll add a bit more if I can actually. Oil bounced nicely yesterday. So far, just sideways, but wouldn't surprise if we bounce all the way back up into the 70, sort of 72 zone. Because if I zoom out, look at these multiple pivots here. This is long-term support. It shouldn't be slicing through this easily. And so far, I don't know how accurate my target was, but you can see, you know, regardless the white line, if I zoom in, he touched it perfectly. You know what I mean? And I don't think that's luck. I think that's a lot of people seeing the same trend lines. So likewise, we may go into this sort of tram zone here and get a bit of resistance and maybe go back down again. And then we'll see if it breaks or not, or maybe it's a time to add. I actually bought the only oil stock I'm in, which is Prosper Energy. I added to it. I got to add to it on a 30% discount or something for my first ad, which was very weak too. A bit like my natural gas buy. So buying very cheap and then buying cheaper would be even better. Just small ads, you know, then you build up a very big position at very low price. It's beautiful. So yeah, oil. Actually, I'll show you that position here. Otherwise, it doesn't really make sense. PEI. So I bought in the 14s or something here. I sort of chased it because I thought, oh my God, off we go. As you can see, I thought, you know, we clear this. Plus, it was making the YouTube rounds. I thought we're going to go straight to the 30s, 100%, which would annoy me. So I just wanted something in it. And then now it's finally starting to correlate with the oil price. I thought, okay, I'll buy that. Yes, even though it broke down from this, I think it's following oil, and I think oil was a buy. So, you know, if it goes lower, I'll add more. I'm adding little amounts, so I don't really care. Let's say I'm half in at the moment. If it goes lower, I'll add another 25%. So then I'll be 3/4 in and then 100% in case there's some massive financial crash, which takes every stock down, which we know can happen. So yeah, that's what I bought in case you're wondering. Uranium. This is another one that's sort of at its pivot lows multi-month. Quite similar, aren't they? The oil, gas, and uranium to some extent. Now, I mentioned this on the day it happened, and we bounced a bit like oil so far. I didn't buy CCJ Cameco because I wanted to get it cheaper and a bit greedy. But also, look, we're getting to a decision zone here. Either we break out or we break down. Probably more likely to break out because every time it hits this, it does go higher, and it is uranium, and it does deserve to be higher overall because it's the energy of the future. But I just feel like it's quite weak too. And I don't know, I just feel like it could actually break down too. So I'm just gonna let it play out here. And I mean, look, it'd be beautiful if it comes back down again, breaks this, You know, does it start to bounce very quickly on all these lows? So this low here, so just on the 18, and then does it go here? I just have to check how it acts on each of these pivot lows. But it'd be great. Otherwise, a massive flush. Then all of the stocks, the uranium stocks, will really take a beating. And then I can really enter. I guess that's why I was just attracted by this bearish scenario, which, you know, could play out. Let's see if the markets, the banking crisis returns, because so far this has acted bearishly with the banks. I mean, I don't think they're trading together, but still, you know, the market went down and so did uranium. So I haven't bought uranium yet, but I'm definitely watching it. Okay, gold and silver. As I said, you know, we did break out the Asian hours. Wasn't straight away. I mean, we tested sort of this zone, then I was asleep, and then I woke up and saw the Asians taking it all the way to 2010 roughly, and then back down again. But look, that is not bearish. As soon as we take out 1986, let's say, I need to delete this line. It will sort of ruin my chart, I think. You know, start to take out this. Look, it's hitting its head on the ceiling. Higher lows. I'm not going to say higher highs because it's always the same high, 1985, but that's the ceiling. Bam, breakout. We're going to go straight back to 2000, 2009 again. So let's see. But are you really allowed to have a crazy move up if there's no major news and if tomorrow it's the Fed? I don't know. So I don't expect too much from gold and silver today. So I'm just gonna no comment for gold and silver today. It really depends on tomorrow. Obviously, we're very, very bullish. Resistance is the all-time high for me, besides yesterday's high of 2009. We do have a long way down if there's some massive drop, but I think the dips will be bought. And I think those zones that I used to see as resistance will be support. So the lines will remain in place for me. And also I'll be buying the miners. So, and I will be adding to the miners because I think dips will not take us all the way below 1800. It would be very hard for me to see how we can go below 1800. But, you know, this kind of a move, although I bought into it and chased into it, I was chasing miners that did not have this kind of a move. But it reminds me a bit of the Russian invasion move. And I'm a bit weary of, you know, a massive retracement. So, but I just don't see that happening at the moment, actually. Just don't see that happening. So let's just leave the trend lines in place, see what happens. Again, I think Wednesday, post-Fed meeting Wednesday, is when I can comment more on gold and silver direction. Silver obviously just follows gold. Hasn't made as much ground. Resistance on the upside is this descending line. Definitely should be very strong resistance. You're not just going to go straight through that as if nothing's there. And on the way down, I'm not sure if this will act as support on the way down. 21 would act as support, but sorry, 21.5, this zone here. Maybe I'll add that just in case, because it could go that low in case. And then we have this ascending. This can disappear now. So can this. Well, anyway, let's see. Again, I don't expect too much from gold or silver today. It's all about tomorrow. Let's look at the miners. And also it's the dollar. The dollar might decide gold and silver also. You see, today the miners went up. Sorry, yesterday, the miners went up despite gold and silver being basically red, basically unchanged. And they went up, you know, look at that, GDX 1.75%. That's decent. DJIA 2.5%. That's very decent for a red metals day. Obviously, it followed the markets, but you know, which it hadn't been doing the whole time. It'd been working opposite to the markets, and then it decides to follow the markets. The day the metals are red. I think it was just playing catch up with the metals. It's one of those rare days where people said, no, these are underbought relative to the metals price. And maybe more importantly, you know, we popped our head above resistance. For me, this is clear resistance on the, I'll start with the GDX actually. It is the GDX, sorry. You know, we popped our head above resistance into the gap zone without filling the gap. And we closed higher than it was when it was forming resistance here. So quite bullish. So if we see gold and silver green today, so far it is, but the day is young, then I expect the miners to continue. And if the markets are green today, like they were yesterday, maybe it continues to follow the markets too and just get green. So miners are still bullish despite the decent move up. I think they have catch up to play with the metals, and those that are buying the miners think the same, which is why I chased it a few days earlier. GDXJ, same thing. We closed quite a significant close above this ascending. So we're back into this ascending zone, but also this horizontal support that I've established. So there's quite a significant close, I think. High of day also, just under high of day, especially the GDXJ, which is more bullish than GDX. So I think the miners still look bullish. So do we start to play into the gap zone? Maybe. And then after the gap, the next resistance really is the old high over here. So let's see what happens, see how they follow the markets of the metals. And that'll do. I'll finish very quickly with Bitcoin, which bit like gold and silver, it had a nice move up sort of early on, 20,500, but then sort of closed or just, acted sideways overall. So I think they're just sort of waiting to see if the banking crisis is really over. Anyway, I'll end it there. Let's see what happens. Today, I don't expect any crazy fireworks. I don't think there's any major news, although I haven't checked. And who knows, there are black swans all over the place, as we know. So, yeah, I'll do another video, of course, after the market closed today.